my friend.
Hey there. How you doing?
I'm great. How are you? How are you doing?
A little tired. Been a busy few weeks, but feeling pretty good.
All right, Austin, you are at DoubleZero. DoubleZero is building a new internet, one that is faster and can actually keep up with the ultimate needs of, I guess, internet capital markets, flipping the traditional financial system. And you guys just launched a token. Was that yesterday, or the day before? I was yesterday.
Yesterday morning. Yes.
It felt like, I'm sure it felt like 48 hours ago, if not more, for you,
Yes.
since you've been up for so long. All right, there's a lot of places to check in here, but I want to start off with, I think, like I guess probably the news that came out before your token launch, which was the no action letter from the SEC. I think for people who maybe aren't deeply in the regulatory side of things or in the building of sort of the fintechs or sort of the DeFi side of things, don't really know how much of a big deal this is. So, and to do it right before your token launch, I guess, did you know that was coming, or were you prepared to launch without it? Like how much of a role did that play in the last couple of days?
Yeah, so the no action letter which we received, which maybe it's worth going through a little bit of what that is. So the SEC is a process where you can go to them and you can say, hey, we would like to do this activity in the future. Could you review this activity and see if it would run afoul of your interpretation of securities law? And so there's two places we requested relief. One was on the programmatic distribution of rewards to contributors, which is basically the paying the Fiber contributors in DoubleZero token for providing capacity to the network. And the second piece was around staking rewards. And there's no staking today on the network, but it is something we intend to add in the future, and making sure those are not classified as securities transactions. And so this was a months-long process of engaging with the SEC and the folks there at the division that evaluate these type of requests. They're fairly common in traditional finance. You see them posted pretty regularly. They're very rare in crypto. I think the last one was 4.5 years ago, and most of them are for very small projects that have very small goals and objectives. Yeah.
I was trying to think when the last one that I heard was. It's definitely been forever, and there was an era there in I think between 2017 and 2020 where that was the big thing everybody was pushing for, and yet I think really struggled to actually make any progress on. So I think for deep in networks, I mean, clearly they do not work without those mechanisms, right? And so all these other ones I think that have launched before were launching and I guess hoping. I mean, I guess that was probably the era of crypto for the last, forever, probably since its beginning. And so I guess this does feel like a meaningful unlock and kind of core to your business.
Yeah, the thing I would say is that it basically takes what is a fairly large gray zone and it makes that gray zone smaller. So what this really means for us, and what DoubleZero is at its core is a physical fiber network. And so these are very high CapEx and OpEx networks to operate. And what that means is they're run by large traditional actors for the most part. Now, these are usually they can be private equity firms, they can be publicly traded companies, but they're generally not people who are steeped in crypto and complex securities transaction law.
And not trying to take a ton of risk, I'm assuming, and jumping into something new as well.
Exactly. They have a very low risk business. It's a very hard business to run. There's a lot of expertise in it, but at the end of the day, they're selling a very dependable, very sticky cash product. And so for them to feel comfortable on the economics of crypto with the different business model of crypto is one thing. If you add the concern over, are we running afoul of securities law now? And how much would it cost to defend if we get an inquiry on this? It just puts up these barriers to adoption. And really, this is what we found in talking to the SEC. Was these are very diligent examiners that are not pro-crypto. They're not anti-crypto. They truly were looking to assess, based on what we are doing, would this be allowed under their agency's interpretation of securities laws? And to get the no action letter, I mean, these things are only given proactively. You can't apply for a no action letter after you've already released your thing. And so, for us, this really was just a fortuitous timing. We applied. I will say in the beginning, I thought there was maybe a 10% chance we'd get this thing. Just because there's, there's mansions in the Hamptons built on crypto companies applying for securities exemptions.
Lawyer's gonna eat.
Exactly. And so, it was great to work with Cooley on this process, and then to get it right before launch. The SEC does not tell you when you're going to get one of these things; they just post it on their website.
Wild.
So, there's a lot of refreshing of the SEC news page.
I mean, I always see you as a strategy guy, and I thought this was just some masterful strategy from the brain of Austin here to get that timing down like that. No, you should just own that. You should just own that, because it was a masterclass of a launch and sort of. Yeah, I mean,
we were hoping to get it like a month earlier,
Okay.
but governments move at their own pace, and so there was a real risk, though, that we were going to miss the timing on this.
Right.
But you can't go to all of the folks who are talking about listing a token and say, hey, look, we have some news that we can't tell you about that might not actually come, but are you okay just arbitrarily delaying for an unknown amount of time? So we just at some point you pick a date and it's ship or die. And it turns out everything aligned well.
I love it. So I'm very curious how the reception has been. I'll maybe leave the token aside to get into a little bit later, but I believe about 20% of Solana stake has migrated to DoubleZero like almost immediately. Was that surprising to you? Was that less than you thought? Like, how's that gone so far?
Yeah, I'm not surprised by it, because we've been running a testnet since February, and our testnet was a much smaller network. It was only 8 pieces of fiber as opposed to the 70 plus we have now, and it was much slower. It was like, it was testnet fiber. It wasn't our best product, but even that had about 16% of Solana running on it up until last week. So what we'd seen early on was that validators are very interested in alternatives to the public internet, and that you have performance benefits even with our testnet. We were outperforming the public internet even just with the DoubleZero testnet. And normally that's not what you see. Normally testnets are worse than what you'd sort of see in a production environment. And so then for us to move to the mainnet beta, which is we're in now, which is over 70 contributions of fiber. We have 12 or 11 independent contributors of fiber to the network at this point. Not all those contributions are online. There's a bunch more coming online through the end of the year, including some very fast, low latency connections on long haul routes that we're really excited about. But really what we're at this point is we just are focused on adoption of validators and building out support for new ecosystems and non-crypto use cases as well.
Interesting. Tell me about that line of business that you see.
Sure. So, at the end of the day, there are a lot of private fiber networks out there, but they're all run by centralized companies, and they're run for just their own activities. So if you look at, a trading firm, they're running a private network because it gives them a speed edge over the competition. If you're looking at Facebook, which is one of the largest investors in private fiber anywhere in the world, they're investing in private fiber because they want Instagram Reels to load really quickly, because they want to sell you ads. And every time you run into buffering, you're less likely to keep scrolling, and they want you to keep scrolling so they can show you more ads. And so there's a ton of these networks that exist out there, but none of them have ever been built using high performance technology. We can get into this a little bit, but what we are doing is a lot of stuff that's not possible on the public internet, because the public internet doesn't support this type of high performance technology. So no one's ever built a high performance network like this before, run by multiple independent parties.
So the idea basically is that, right now it's limited to those who have, extreme value they can capture from it, and the ability to spend a ton of CapEx on actually developing it out.
Yeah.
And that there's probably a very sizable market in your mind of others who would want to tap into that have enough of a business case for it, but maybe not the desirability to take on the risk of actually building out their own network.
Yeah, there absolutely is. And, you can think about this as there is a real technology story here, and that's the decentralization component of this thing, and that's worth getting into. But there's a really important business change as well. If you go back to the pre-cloud days, you called up someone and you said, hi, I'd like to buy 20 servers. And they said, great, what are the specs? And you give them the specs. And then 3 weeks later, they show up and they rack them in. And if you're lucky, you're up and running in a month. And Amazon and Google and Microsoft said, what if you just had a credit card and you could just get 40 servers up and running in 15 minutes, 5 minutes, 30 seconds? That would be pretty transformational. And that elastic scalability is one of the main things that allowed the cloud providers to take off. It was as much a technology change as a business model change. And we sort of see the same thing here, where there's not really a system you can go to in the world and say, I'm operating in Tokyo TY2 data center. I need to send a bunch of high performance data over to New York. let me just sign up for something that does this. You would think
Right.
there would be transport services, but if you're building out a private fiber network, this is a years-long effort to assemble pieces of fiber together to build this network. And our CTO and one of my co-founders, Andrew McConnell, he actually came from first initially the traditional exchange world, and then on the trading firm side. And he spent years with his team building out a high-performance global trading network for traditional finance, and that was a very long process.
Yeah, I mean, I've watched Flash Boys, if
Yeah,
that's what it's called. You get to see,
yeah.
the negotiation of running a wire under somebody's house. I think that's come up on my reels recently.
Now imagine that in 10 languages and 13 countries
Yes, scale, very interesting.
with 13 different regulators.
No, thanks. I don't want to imagine that. Does not sound like a fun time. I'm glad that there's folks like you that are doing that work, though. Okay, so I think your token launch was also, I mean, it was unique, right? I think right now what we're seeing, I think, is these crowdfund raises, whether that's sort of the Plasma on Echo launch ahead of a token launch, and then a ton of incentives being dropped into pools, and sort of this, or I guess before that, we're seeing these sort of low float, high FTV token launches where there was sort of a compression of supply and launching at a high price and these sort of down only charts out of it. I'm sort of trying to find the word to describe what I think the DoubleZero, but it feels very much like a direct listing. Is that fair? Like it was just sort of like priced at what it sounds like the market cared about, and there was supply available, and it kind of started trading without a whole lot of other hubbub.
Yeah, I mean that's sort of our goal when we set out for this process was organic price discovery with as little interference as possible. And you'd be amazed how hard that is to
I'm not amazed.
do.
It is probably the hardest, most challenging thing in my mind around making tokens real that represent value on the internet.
Yeah, it is incredibly hard to actually orchestrate something that allows for organic price discovery, especially when markets start moving quickly. And part of this is just the regulations have not changed. You don't have the ability to do some of the types of things that you would like to do if you had a world where everything was permissible. Let me just put it that way. But the way this starts out is that the token listed on every exchange that chose to list at open at the last round valuation. So any sort of pricing that's seen from there, it's a result of market forces.
And what was that valuation?
7.5 cents per token. And so that was the validator sale that took place on CoinList in the spring, which was an opportunity for validators that run on a whole different number of blockchains to actually sign up and participate in this sale. It was actually a very cool mechanism with CoinList where they had to authenticate that they actually run a validator and sign with those validator keys, because you sort of think about what is the most important community to a network, and it depends what type of network it is. For Pump.Fun, it's Pump.Fun traders. For a DeFi network, it's people who commit TVL to it. For us, there's the contributor network, but it's really the validators and the validators operating on it that are the backbone of making a network like this work. All of the work that will be done with trade products and stuff that's optimized for low latency delivery of transactions. If you're trying to do like an arbitrage event between Binance and the Jupiter order book or something like that, that only works when you have all of the validators on the network from a delivery perspective. And so for us, we thought it was very important to make sure validators had a chance to become aligned with the network before it was actually launched. And it was also just, quite frankly, a utility sale. They will be paying fees to operate on the network that are expressed in 2Z tokens. So there's a component of that as well.
The criticism I saw around this launch was sort of around the unlocked tokens. I think 35% foundation was completely unlocked. How dare you have unlocked tokens? And I think what I'll say is the masterclass of, I think, founder-led communication that you put on there was really impressive. I'm not sure if it swayed everybody, probably impossible to do that, but can you maybe talk about at least the thinking or the strategy around what tokens were unlocked at launch and really the purpose behind that strategy?
I mean, look, I'll say the thing that you're not supposed to say, which is if it were up to me, everything would have been unlocked day one, except for team. I think it's actually...
Why?
organic price discovery. Like
There's
this
too
is
much of an
maximum
overhang
capitalism.
here, and people don't know how to do the math on it or figure it out.
It's not even that. It's just like when you sort of look at a token that has, an unknown amount of locked, right? XRP is a great example of this. According to the reporting, only half of the supply of it's actually circulating supply. Now, I don't know where the other piece is locked. I don't know what the conditions are. It's locked under. There's no, the vesting is not transparent on that. No, and it's nothing against XRP. This is the case for a myriad of protocols, but it's very hard to estimate, like, okay, what does the pressure on this token look like? How does someone who's evaluating it think about what might happen in different scenarios? And none of this is like, chart watching is about as much of a science as voodoo is a science. But at the end of the day, if you have an unlocked supply of token, which is what Bitcoin has, which is what Ethereum has now, you are both subject to and benefit from like pure capitalist market forces. And so I think that's actually really important for projects to get to as quickly as possible.
So where does that limitation come from then? Because obviously there's other projects out there. Why couldn't you guys just come out and do a fully unlocked launch?
Because we needed money to build the network. Like at the end of the day, you have to remember that these are very high OpEx and CapEx projects. And so you have to conduct token sales, to take in money to treasury, to help actually from an engineering perspective, have to get engineers on board, all these sorts of things. And there's sort of this like everything in retrospect is like, oh, why didn't you just directly raise from individuals? And there's a few pieces here. One is that it's very, very challenging from a legal and regulatory perspective. The second is the validator sale is intentionally designed to get exposure for folks aligned on this. And the third is, things are non-consensus bets. When all you have is a white paper and an idea and like a twinkle in your eye, like that is not an easy thing to go out and raise money with.
I mean, it is the most interesting. Everybody knows that being early in crypto is like the game. Frankly, I think that everybody's trying to go play, and yet building conviction in those early opportunities is just like a very, very complicated thing.
I also think that meta is directionally wrong. I think if you were looking at, if you were looking for things to invest in 2022 and 2023, it's pretty hard to outperform being a liquid fund and just buying SOL or buying Bitcoin. There's a lot of people who invested in a lot of deals back then for companies that are still private, still have not launched, still have not put a token, plus then they have vesting terms after the token comes out. I think a lot of the meta around invest as early as you can, I mean, on some level, yes, but on a risk-adjusted perspective, like you really have to be careful. Just because you're getting offered an investment at a project at what feels like a low valuation doesn't mean the thing's actually going to launch, or when it launches, it will have anywhere near the type of traction that you expect it to. And this is early stage investing 101, right? Over 90% of startups fail before IPO or acquisition. That's true in crypto as well. And so I think that's important.
I agree with mine. Yeah, I fully agree. And yet I think it is like the dominant narrative.
Yes,
it's driven meme coin culture. I think
completely.
That's interesting.
But you asked a point that I also want to specifically address, which is around foundation supply. So there is this section of foundation and ecosystem tokens. These are tokens that are held by the foundation that can be used for grants, for operations, for all sorts of things. It's pretty. I don't know of a single foundation where their supply was locked. This is very common for these things to be unlocked, in part because if it's locked, it can't be used. Now, usually what happens is when something like a grant is given out, that grant is now subject to a lock. That's a very common. So what happens is these tokens usually, if they're going to start circulating, they do so in a locked capacity. That's the typical process. When I was at Solana Foundation, all of the grants that Solana Foundation gave out were subject to locks as well. And that's how most ecosystem foundations do it. And so when we look at these charts, there's sort of two ways to look at this, right? One is, if we say, okay, the circulating supply is actually everything that's unlocked. Well, that can give people a false impression of market depth and liquidity, because the truth is that the tokens held by the foundation are not moving. At the same time, if you say, oh, it's actually a smaller number, that gives the wrong perception, because then people are like, why is there this unlocked supply held at the foundation if that's not part of circulating? The real answer here is the industry has no shared definition. We had different exchanges and different portfolio trackers asking for information to be reported in different ways. And so all we can do is publish the token disclosures, which have been public for months, and say, look at this and make your own conclusions about how you as an individual want to evaluate this.
Yeah, I think there's been a big discussion in the hyperliquid community around this with, I think, an investor proposal to try to change change that token model to some degree, in large part because of how confusing a CoinGecko or a CoinMarketCap or these different exchanges are sort of reporting it. Which,
yeah,
it's funny, these forces that sort of are maybe not, it's not super clear that they would have such an impact on the perception or how we would even structure tokens. But if 90% of people are looking at it through these exchanges and through these portfolio trackers, that is where that sort of
it's meaningful.
Yeah, exactly. Yeah.
And look, I think people should be aware of float. They should be aware of lock. They should be aware of token unlock schedules. We've got all of that public. And it's also, in the case of most protocols, it is on chain. And so you can just sort of look and see as well. I think this is kind of a really, but these are important components, right? This is a space where we have very few regulatory interventions, even though we have a lot of regulatory guidance. And what that means is different trackers report numbers in different ways. And I think that's actually a feature, not a bug. If you look at the traditional space, people will talk about, like all these data forms that are uploaded to Edgar. This is like such a good thing of transparency. And you're like, is it transparency or is it a form filing? Baby. Because and also like the penalties for not filing those forms are very small. We saw this with Elon's acquisition of Twitter, where there was a whole bunch of stuff that they just paid the fines on and did it anyway because the fines were so small on a $44 billion acquisition. Who cared? And it gave them better positioning. So I really want to stress that like the ultimate transparency is just the block explorer. It is going on Solscan, is going on Solana.fm, it's going on Dune, it's going on Nansen, and it is being able to query in real time the position and movement of every token going back to Genesis.
Yeah, I think that's true, and also, the vast majority of people would have zero idea of how to make sense of that, and so we do need these abstractions that are able to actually bring it together. But yeah, I mean, it's there, and I think there's a lot of sleuths out there that do great work in being able to sort of see what the on-chain truth is. I know I'm taking up a bit more of your time. Do you have another 5 minutes? Because I have a couple of questions.
Yes.
Amazing. Okay. So I think what was interesting, it kind of came into this sort of unlock process, was the coalition that you had built for this. I think there's sort of like this, you need money to go build this out. It's very capital intensive, but you also need credibility to build this out. And I think, I've seen, like VCs like Multicoin and Dragonfly, sort of one bucket there. And then I think you sort of have these contributors, Jump, Galaxy, various staking facilities. So I'm really curious about maybe the differences in the way that you approach that, or the strategy, how you kind of brought that ecosystem together.
Yeah, I think the ultimate goal for any project, and really truly any company, is to have a multiple series of parties that for different reasons are interested in the success and future of the project. Ethereum is kind of the gold standard of this. It's got stablecoin issuers on top of it. It's got DeFi on top of it. It's got degens on top of it. It has all of these different forces and interests that sort of have a balancing out effect and prevent any one group from having too much influence, in theory. That's the way the theory of this is supposed to work. It's the same theory of separation of powers in the US government, that we should have appropriate checks and balances and pushbacks. So for us, it was really important to not have a contributor network that was all VCs or all telcos or all trading firms or all data center providers and bare metal providers. Instead, we actually have a myriad of all of these. So we have some VCs that are contributing fiber to the network. We then also have, network providers, people who actually have access to fiber. We have TerraSwitch, Latitude, Cherry, servers.com, all these data center and bare metal providers. And then we have trading firms like TRW, Cumberland, and Jump that are also contributing to this. So, that's kind of a real, like that consortium model, I think, has been a real success of the project, especially, and I really want to stress this is not like a layer one blockchain where it costs maybe $1,200 a month to run a validator. This is a very high capex network.
Yeah. I think way back, maybe on our other show, we had Meltem on talking about this
Oh yeah.
Physical meets crypto. And, she in her very esoteric way likes to talk about, bring those two together in an interesting way. And I think it definitely unlocked a new category in my mind of this idea of how we can use sort of incentives and ecosystem building to sort of pull real world assets into existence. So I think it's absolutely fascinating. Okay, so I think the other thing is I've sort of, we've had the pleasure of talking to you before. I've definitely been watching what you're doing. You got me very interested last time we were chatting. And so, yeah, cool token, cool product. But I think you've put on a masterclass of communications here. And I can contrast that with, the last, say, over the weekend and until last week, the big sort of announcement or release was Plasma. Everybody got rich. Then all of a sudden the tokens was down, and then everybody's saying that it's a scam, and everybody's dropping and it took Paul, the founder of Plasma, I think until midweek here to actually jump in and start to dispel some of the FUD. And my takeaway from that was like, why? Mm-hmm. Oh, baby, why did you wait so long to just jump in there and clarify? And I can get it. It's an intense time. You don't want to sort of put attention on the FUD unnecessarily, but it just seemed like it let things fester. And then I look at how you've shown up on the timeline over the last little while. Every single post where there was some criticism, and definitely more than just criticism, you were in there with a very succinct, clear message, and I feel like that is just like, we're playing in 24/7 markets. You kind of need to have 24/7 communication, and it kind of lands on you as the face of this thing. So can you talk about how are you thinking about approaching the communication side of this launch?
Yeah, I had sort of 4 years of the best masterclass in this, which is working for Raj and Toli at Solana. Solana Labs and Solana Foundation. I also ran comms at Solana Foundation for a little while, basically from like summer of 21 through the collapse of FTX into like early 23, which is, a nice, easy time to have that job. But truly what it is I think so many times people view comms as like a deodorant. Like you just spray it on and it like solves a problem for you. And really what it is like you have to address the core actual issue. And if you address the core issue, the comms plan just comes out of that organically. So this is one of those things where this is very old school. This is going back to like, a senator being like, there's a controversy about this thing. I'm going to do a 2.5 hour long press conference. And every single question you have, like, I'm going to give you an answer. And you may not agree with my answer, but you're going to get an honest answer from me about what's going on. And that really, I think, is the only way that you can do comms in 2025 when you have 24/7 markets in multiple languages where like there is active disinformation. There are people who are shorting your token that have hired bot farms. There are people who are longing your token that have hired bot farms. It's an incredibly noisy market. And so you can't spin. You just have to be honest with people and accept they will disagree with you. You're not going to convince everyone. I'm not trying to convince everyone. I'm going from this from a place of like, I am confident in the choices that we have made and in the view that we have on this. And I'm going to explain it to you. And if you disagree at the end of it, like Godspeed, you're your own person. Like that's the whole point of the space is to do your own research and make your own decisions.
I think that experience piece there is, can't be overstated. There's such a, I see this with a lot of early stage founders that put tokens out, and I've experienced it myself. Like the first time you are getting that wave of criticism, as a human being, I think it's a very hard thing to actually navigate until you get used to it, right? And I think it is about context building. I think being aware that everybody, like, this might not be a real human being. There's a ton of mixed incentives out there. And so really what you're left with is the choices you've made and the confidence you have in those choices. And so you better be thoughtful about that. And if you are communicating that clearly, I think is clearly the path forward. So.
Yeah. And comms is always downstream of the choices you made upstream. Like if you're uncomfortable with a choice, if your sense is like, oh man, this wouldn't be great if it got out, probably don't make that choice. Like these are open, permissionless ecosystems where everything is on chain. And if you can't stand behind the actions you're taking, you should think twice about whether you should take them or not.
Sage advice, Austin. All right, give us, I know your last few months has probably been all about this week, but clearly there's a big you're just getting started here, and that's maybe the fun of it all here, if I'll say that generally. Where does your attention turn to next? What should we be looking for?
Yeah, so our goal is to get, as much of the Solana ecosystem on board with this as we can as quickly as possible. When you get a sort of critical mass of adoption of DoubleZero, then protocol developers start to become comfortable, tightening timings on stuff, increasing capacity. We actually just saw a SIMD, I think it was last week, maybe the week before, from the Firedancer team about raising compute limits on Solana to infinite. Which basically means you can build a block with it that uses as much compute as you want. That opens up the door to a whole bunch of other types of activities. And these are the type of things where getting data more quickly, being able to move it around more quickly, these are all places the DoubleZero network is going to help. At the end of the day, though, it is up to protocol developers in all ecosystems to make the decision, do we want to go faster than the public internet lets us go, or do we consider the public internet to be our ceiling? And, Ethereum made a decision about a ceiling a long time ago. They said, we want these very low validator specs, and that's the place we're going to pick to optimize. Solana might pick somewhere else. They may pick nowhere. But the part of this is base layer neutral infrastructure. So, we're already working with Shelby, which is an Aptos storage project. The Fogo network has announced they're going to build on us. And then we have a few other blockchains that we've been talking with about adopting the DoubleZero network as well, including some Ethereum L2s.
Okay, so I realize I have one more question here. I'm curious what the metrics or the dashboard, like if you're going to put a dashboard together for somebody like me who's very intrigued by this business, who wants to understand how the business is doing and recognize that the chart is maybe just one manifestation of that. Like what are the KPIs or the lines on that dashboard?
So DoubleZero.xyz/dashboard.
Oh, he's got it.
Conveniently. So this is not a financials dashboard. This is a metrics and fiber network dashboard. So what this has on it is all of the fiber links. You can see their capacity and utilization in real time. It's a pretty cool map.
It's sexy.
I highly recommend you check it out. Look, our live and die over the long term is, can we make validators more efficient and more profitable? And if the answer to that is yes, we're going to see great adoption. If the answer to that is no, then maybe that we find some other use cases initially, or it's something like blockchain foundations footing the bill because it benefits the overall aggregate performance of the network. But we sort of have this dual mandate. We have to make the entire ecosystem faster by providing this base level service. But validators are, for the most part, financially self-interested actors, as they should be in any good capitalist system. And so we have to make sure that at the end of the day, we are either bringing in other lines of revenue, like trading services, not trading services, but trading products built for people who are trying to do arbitrages or high frequency trading on crypto to have a better experience trading. And we have to make validators additional money as well.
The hard work just beginning.
Yes.
Hopefully you will get yourself some sleep over this weekend here.
We'll see.
Go touch some free. Yeah, maybe not. Austin, I always appreciate you showing up here and helping me get a little bit smarter on a part of the world that I'm very much intrigued by. Very impressive, as I've said before, and how you show up here. And I think the launch seems, at least from my perspective, to have gone swimmingly. I wish you continued success and look forward to checking in with you again in a couple months.
Thank you.
Thanks, Austin.
Me too.
Cheers,
thanks for having me on.